Hello everyone. Welcome to another accounting video. I'm your host, Professor Capko. Today we're going to briefly look at debits and credits in action. I've done some previous videos showing you when it's appropriate to debit or credit an account, and I'm going to give you an example or two here, and I'll do some other videos with more in depth, but I want to at least give you a flavor for how it works. So let's say we have a transaction involving cash, and you're a business that sells something, it doesn't matter what, sells widgets. And let's say you made a sale for cash for $1,500. So you sold one sale of widgets for $1,500. Let's see how that works. So first of all, I'm going to do a T account for cash. And cash is an asset. It's an asset. It's something you own. And we know assets increase with debits, which is left, and they decrease with credits, which is to the right. Debits are left, credits are right. Cash, being an asset, increases with debits and decreases with credits. So you've made a sale for $1,500. So we've increased the amount of cash we have by $1,500. So I'm going to debit the cash account for that amount. I put it on the left-hand side here. So that shows an increase of cash of $1,500. For dual entry accounting, double entry accounting, we have to have an equal offsetting credit. Okay, it can be more than one credit or it can be one credit, but it has to equal our debits. Our debits and credits have to equal for it to remain in balance. So the question would be, what account are we going to credit? We've debited cash for $1,500. What account will we credit? Well, I told you that we made sales, right? We made a sale of $1,500. So you would have an account, perhaps it's called sales revenue. Some of the names of the accounts could vary slightly, but it would be some sort of revenue account. Remember that your asset accounts, such as cash, wind up on the balance sheet. Revenue accounts wind up on the income statement. We'll get into the financial statements in a different video, but this is just a preview. Again, debits are left, credits are right. However, since this is a revenue account, revenues increase with credits and decrease with debits. So that means if we've increased our revenue by $1,500 with this sale, I'm going to credit the $1,500 for sales revenue. So you can see that I've got a debit of $1,500 for cash, and I've got an offsetting credit for sales revenue of $1,500. We'll get into the journal entries in another video, but I wanted to show you at least the T accounts on that. Let's take it a step further. Let's say it's time to pay rent, and your rent is $1,000 and you're going to pay it in cash. Well, that means that we've got to reduce our cash by $1,000, right? If we've got rent of $1,000, we're going to pay it in cash. We're going to reduce our cash by $1,000. And since cash is an asset, it's reduced by credits. So I'm going to credit $1,000 here. And because we've got double entry accounting, we've got to have an offsetting equal $1,000 debit somewhere else. Well, where would that go? Well, rent expense might be the name of the account since we're renting something, so it might be called rent expense. And expenses are going to be an income statement account as opposed to a balance sheet account. And since it's an expense, expenses, we have debits on the left, credits on the right. That never changes. And expenses increase with debits and decrease with credits. So if we've got a transaction here where we've paid $1,000 rent in cash, that's a credit to cash. We have to debit our rent expense for $1,000. So this $1,000 and that $1,000 offset each other and balances. If you were to take a look at this cash account, which is an asset account, you could see if these are the only two transactions, we had a debit of $1,500 and a credit of $1,000. That means we have a debit balance of $500. That's something we'd look to in the ledgers, and we'll get into that deeper at another time, but you can at least see that we still have a debit balance for our cash. In other words, we have a positive $500 balance in our bank account. Our expenses would keep adding up here on the debit side, and our hopefully revenues will keep adding up on the credit side. And at the end of the year or at the end of the period, we can then offset each other and see if we actually made a profit. We'll get into that more later. But until then, I just wanted to show you the debits and credits in action. If you enjoyed this video, please subscribe and smash that like button. It really will help me toward the YouTube algorithm. Share this video with your friends if you've got folks that are in business, or if you are an accounting or business student, you'll find this helpful. Share it with anybody who is in those situations. And until next time, keep your grade alive and subscribe. I'm Professor Capko. Thank you.